Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. Well, we finally made it to Fed Day. Very exciting today. Here's what's going on so far. We got the Dow Jones up a couple hundred, but the Nasdaq's down a little. Okay, so what's going to happen today? Well, the Fed's going to come out and they're going to keep interest rates the same. Now, is that the right move? No, that's a very stupid move. You got inflation coming back, but we're going to pause on the interest rate increases. Now, do I think they're going to raise later in the year? Yes, I do. Yes, I do, because they're going to have to fight the inflation. But today, they're going to pause. They're going to try to talk the inflation down. They're going to say, hey, we're going to pause, but we're not done yet. We're going to raise them higher. And they're hoping that'll bring the market in, but I don't think it will. I think we might get a little bit of a rally today here. Now, why don't they just raise the rate today? Well, they only have really one bullet left in the gun. They want to shoot off another quarter point, but they don't want to shoot it right now because then they out of bullets and inflation just runs off. A lot of people think that we won the war against inflation. The government, they'll tell you we come from 9% down to 3%. Look at inflation is returning back higher. And if you go on shadow stats, inflation's running about 9 or 10% right now. We didn't win the war. We're losing the war. And we're going to lose the war because we're out of bullets. All right. But there is something exciting here, something that we accomplished as a group. We have now officially hit $33 trillion in debt. $33 trillion in debt. The national debt, go to nationaldebtclock.org and you can see we clicked over to 33 trillion. Now, just a couple of months ago, we were at 32 trillion. And it's an over-under bet, but do you think we'll hit 34 trillion before or after Christmas? I mean, we're just spending like crazy, right? And you know, it's interesting. It's interesting. When I was a kid, right? When I was a kid, which goes back into the 60s, I was growing up, but you could take $1 of debt would get you about $6 to $8 of economic expansion. So for every dollar of debt that the government spent, we got $6 to $8 of economic expansion. And that was a great thing. It was a smart thing to do. Right now, for every dollar of debt that we're taking on, we get 30 cents back in economic expansion. This is a bad business model. They should stop spending money immediately. For every dollar we're spending, we're only getting 30 cents back. It's broken. It's like pushing on a string. It doesn't have an effect. It's just broken. Stop spending money. But there is good news. Good news. We got the government shutdown. The government's going to shut down October 1st, right? Because we can't get that spending bill passed. So we don't have the money to fund the government. Now, I think a government shutdown should be permanent. That way they'd stop spending money, right? We could fix some of these problems if we could just get the government to go away and stop spending all the money that me and you have to pay for. This is just a little rant before we get over to the real estate side of things. All right, well, let's go over there anyways. But before we do, you see, what we're doing is we're trying to artificially stimulate the economy. And it's not working. We spend $1 to get 30 cents of economic expansion. And when you try to artificially stimulate the economy, what does it do? It produces inflation. It doesn't make inflation go away. It produces inflation. Stop spending money and maybe inflation will calm down, but we're not going to go that route. That route would be too logical. We're not going to raise rates today. We're going to keep them flat today. Now, that's probably going to send the market up for a little bit of a bounce. I do still think the market's going to come in long term, but a little bit of a bounce today is not going to surprise me at all. Okay, so let's get over to the real estate side of things. All right. So here is what I keep hearing, and it's really kind of, well, it cracks me up, actually. You got to buy now. Go out, buy a house. Hurry up. Hurry up. The price is up there where Billy Bob sold at. You can go out and buy one close to where he sold. All right, so you go out and you buy a house now because the Fed's going to cut rates. And when they cut rates, houses are going to skyrocket. You're never going to get a chance to buy a house ever again if you don't go out and buy now, right? And they're going to cut the rates and the houses are going to skyrocket. But when they cut the rates, you're going to be able to refinance your house. So hurry up, Go out there and buy right now, right? And I've been hearing this all over. The real estate agents were trained to say it because it's always a great time to buy, right? It's a great time to buy a house. Today's a great time. Get out there and buy. But look, this is not my take at all. It's the worst time ever to buy a house. We got the rates up. We got the prices up. But when it's going to happen when the Fed actually does cut the rate? What's going to happen? Well, here's the thing. When they cut the rate, there's going to be a reason that they'd cut the rate. They aren't just going to cut the rate because, hey, I feel like cutting the rate. No, they're going to cut the rate because we're in another crisis. Right now, we're in a financial crisis. We're in a banking crisis. They don't like to talk about that on mainstream media. But when they finally cut the rate, it's going to be obvious to them that we're in a financial crisis. It's going to be obvious to them that we're in a recession, maybe even going into a depression. When they cut the rate, it's going to be for a reason. And when we're in that recession, in that depression, there's going to be millions and millions of jobs lost. 10 million jobs lost. 10 million people out there walking around with no job. Look, when they have no job, what happens? They can't pay their mortgage. They surely can't go buy a house. They don't have a job. Look, as soon as this happens, as soon as the Fed cuts the rate, and what happens when they cut the rate? You see, the real carnage happens when you re-invert the yield curve. Right now, this yield curve has been inverted for the longest ever in the history of the world. And this foreshadows the recession. This means the recession's going to be showing up. But what the real carnage is done is when it starts to reinvert itself. So when they cut the rate, the short end comes down, but the long end starts to go up above the short end. The 10-year right now and the 2-year, they're very inverted, right? The 2-year up, I don't know, let's call it 5, 10-year down here at 4, but it's going to reinvert this way. And when it does, that's where the damage comes. That's where the house prices start to collapse. That's where the whole thing comes down. Now, right now, we're in a crisis, a disaster, if you will, in the housing market, right? I mean, I'm a real estate broker. We can talk about this. A lot of brokers going to tell you, no, it's a great time to buy. Look, transactions are down 30 to 40% in most areas year over year. And that always precludes the prices of houses coming down, right? That's foreshadowing that the house prices are too high, that they're going to be coming down. The real estate market's locked up. It's a disaster. You can sit back and watch this burn. Now, right now it's a slow burn, but I do think it's going to become an inferno. It's going to take off. The prices are going to come down. Once again, this is just my take. Now, the moon boys, oh, we're going to the moon. We're going straight up. Look, it's not going to work that way. Now, right now, all right, so houses are completely unaffordable, right? Less than 85% of the people in the United States cannot afford to buy a house. 85%. That's how you know you're in a bubble. The largest bubble in the history of the world. When you're not in a bubble in normal times, you go out, you get a job, you can go buy a house. But right now, 85% of people cannot afford to buy a house. 15% can still afford to buy. A lot of them already own a house. Some of them own 2, 3 houses because they're rich. They can afford houses, but 85% of the general population cannot afford to buy a house. Now, today's Fed Day. Now, this is funny. You know, Yahoo Finance, they always crack me up. I love Yahoo Finance. But anyways, they say housing affordability is the Fed's next biggest problem next to inflation. So they're going to fight inflation, but housing affordability is their second biggest problem. Now, I don't know what the Fed mandate says exactly, but I don't think it says anything about making houses affordable. But I don't think that's what it says. But they always want the Fed to fix everything. Climate change, they asked the Fed, they asked Jerome, how can you fix climate change? Look, the dude's in charge of interest rates. He doesn't fix climate change. These questions are just stupid. It's not his job to fix the housing market. Look, if you let the housing market be a free market, it would fix itself. But it's not a free market. We've kept rates at 0%. We printed $30 trillion 33 trillion just since 2008. And now we're 33 trillion in debt. We got 9 trillion on the Fed's balance sheet. 1/3 of that is mortgage-backed securities. All right. So they're artificially propping up the housing market. You let a free market happen. You take the Fed out of the game and make them sell all those mortgage-backed securities. Let's start with that. Let's see what that does to the housing market. It would collapse it. 50% would be a conservative estimate. But no, they're not going to do that because they can't let the free market rule. They cannot, right? They got to have a fixed market. Now, it's funny. It's funny. Okay. Once again, Yahoo Finance. Okay. The headline, Americans cannot afford homes. Oh, really? That's correct. Americans cannot afford homes. But the subheadline is, that's a big problem for Biden. Now it's going to be Biden's chance to fix the housing market, right? And now, once again, I don't think Biden should fix the housing market. I think we let the housing market go free, sell all the mortgage-backed securities. That'll bring the houses right down. But they can't do that, and mortgage rates would spike up, right? And they can't do that. They can't allow that to happen. The houses would crash. All their friends would lose a lot of money. But they're going to make Biden in charge of making houses affordable. And now I can't even believe what I'm hearing. Okay, so here's how they're going to make houses affordable. They're talking about these programs for real. All right, eliminate capital gains taxes when you sell your house. They're just going to eliminate capital gains taxes so just for a 2-year period of time so you can put your house on the market. Well, that'd flood the house with inventory. That'd probably work. The other one is where they're just going to double the exemption from 200. Right now, the exemption's 250 for a single person, 500,000 for a married couple. Okay, they're going to double that exemption. That's another plan that's out there. Here's a crazy one. Okay, all right. The government is just going to pay $25,000 to anyone that puts their house up for sale. Put your house up for sale, the government will give you $25,000. You can't make this stuff up. These are what they're looking at doing, right? They're looking at doing this. Okay, well, here's an idea. Why not make the mortgages assumable like they were back in the 80s, right? Oh, but the banks would get hurt. Then we can't let the banks get hurt. So that's not on the table. Right? A lot of people want to take, the property subject to the mortgage. And if the bank finds out, they're going to call the loan due because they don't want you locked in at 2.8%. They want you to pay the 7.5% to 8%. And I really think we're going over 10%. I really do. But look, Biden is going to be in charge of making homes affordable. We're in big trouble there. Now look at. All right. I don't think he should have anything to do with it, right? I don't think so. You make the market free, stop buying these mortgage-backed securities, sell the $3 trillion of them that you have, the houses will come right back down really quick, very fast. But that's not the route they're going to take. No. They got this bubble. They want to keep the bubble blown up. They want to make it bigger so the moon boys can be happy. The moon boys are going to take this bubble to the next level. But homes are not affordable for many reasons. It's just not. Interest rates. Look at property taxes straight up, insurance straight up, HOA fees straight up, maintenance straight up, utility bills. Oh my goodness, utility bills are going to be off the chart this winter. I mean, 20 million people right now cannot afford their utility bills. And we're in the good times. This summertime still, right? Well, maybe spring now. I don't really know. But look, this is the good times. Wait till winter comes. 20 million people not paying their utilities. That could shoot up to 30 or 40 million people just like that, right? But don't worry. They got a plan. And when the government gets a plan, there's one thing I'm certain about. There's one thing I guarantee you that the government will mess it up, right? They will somehow mess this up. That I guarantee you. So whatever plan they come out with, maybe they get rid of capital gains tax on houses. Maybe they give everybody $25,000 for selling a house. Maybe they do make mortgages assumable. Now that would be fascinating. That'd be fascinating. But here's all they got to do, right? All they have to do is raise the fractional reserve a bank is required to hold on, right? All right. So it's at 0% right now. Raise that up to 20%. 20%, borrowing will tighten up. People won't be able to buy a home. No one will be able to sell a home. You will have to almost pay cash for a home. And I'm afraid that's the direction we're going. But that would lock things up. All right. And that would bring the home price down. They don't want to bring the home price down, or they'd start doing some of this. They'd start selling those mortgage-backed securities. The Fed on their balance sheet, $3 trillion mortgage-backed securities. Put those onto the market and let's see what houses do. Houses would come down, but that would be a free market. That would be a free market. This house of cards, it's a disaster. It's going to burn. It's going to crash. This is just my take. Now, the Moon Boys, they'll tell you it's got a different take. But I don't think the Fed should have, that's not their job to make houses affordable. It's the free market to make houses affordable. If the Fed stayed out of the marketplace, houses would already be affordable. The Fed is the only one to blame for houses being where they're at. Holding interest rates at 0% for 14 years created this bubble, created the corporations getting into the business. Corporations wouldn't be in the business unless the Fed held them at 0%. They wouldn't have any reason to. They'd be off doing their regular business, making money. They wouldn't need to go mess up the housing market. But the housing market has become this disaster zone. And the only way to change it is to make it a free market again. Sell those mortgage-backed securities. Let's see where these things balance out at. This is just my take. I'm Tall Mike. If you like this stuff, give me a thumbs up today. Punch that subscribe button so we can talk later in the week. Share this with a friend if you would. That'd be great. We got Fed Day. I got to go watch. It's about, we're still over an hour away. But anyways, an hour away, the Fed's going to come out, hold rates steady, watch the market get a little bounce before we come in. That's just Tall Mike's take. Get out there, everybody. Enjoy your day. Bye-bye now.